Hello and welcome to MindWord, where I look at financial subjects and give my opinions on them. So in this video we are going to look at something that is called the lost decade in Japanese stock market. So it was a period where, let's actually open TradingView and take a look at Japanese stock market. So this is the index of Japanese stock market. Let's pick one here. Which one would be best? I'm gonna go with this one. Let's see how long it goes back. Yes, that is nice. So last decade beginning in 1990, and they claim it is because of asset price bubble collapse, but that is not the cause. What caused the asset bubble price collapse then? Who pumped it up? That would be my question. So we can see 1990s there was a big stock market bubble, and then let's well, yeah, if you want you can read up more on it, but the main thing is that the stock market was really overpriced and it collapsed. Japan property prices went down as well. Yeah. Okay, so in this video I'm going to look at how this relates to demographics of Japan. And I know most of my videos have been about demographics so far. I would really like to make some other videos as well, but that will have to be another day, because today it's going to be another one of those demographics videos. So let's open up the Japanese demographics. Okay, now this is not the page. Yes, demographics of Japan. So what we can see here now, what happens if asset bubbles form? Then credit is created. So how the credit works in fiat system, that is either government prints the money or people take out real estate loans or any kinds of credit. And since we have fractional bank system in most of the countries, if not all of them, some countries use another currencies, like European countries use the euro. So the basically you take a loan, the bank owns a fraction of it and a fraction of the money that is going to be lent to you, and then the rest is created out of thin air, so to say. So if that would be true, then that would mean that this has to correlate with some sort of peak in demographics. Yeah, so what we see, this is 1990, and here today it's 2024, so 1990 is, let's round the numbers up, it's 30 years ago about. maybe a bit more than 30 years. So home buying years are nowadays from 20 to 30, somewhere there. And 30 years ago, this peak was right here at 20 years old. So when these people bought their homes, we had, okay, this needs a refresh. When those people bought home, we had this peak. These people created a lot of credit in the system, and it showed also in the stock market. And when it stopped, and it's going down till today, then it crashed. Now, we also see that there is another, so to say, bubble emerging, and we see no indication that is true in the demographics. Then there is also another variable that is in this equation, and that was money creation, as we said. So what we do, we can see we can divide this with Japanese money supply M1, and we get a whole other picture that in 90s, yes, there was a bubble, but then the system, when the system crashed, it hasn't gone up since then. So this will correlate with this. We crashed and we went down. We crashed and we're still going down. There is no hope. So we went up nominally, but in real terms, when we take in account inflation or money creation, however you prefer to say it, then you can see that there is no real growth. So, and this peak here, it didn't draw out in the previous chart, but now we can see that there was another peak in 1960s, and that peak actually correlates with this one. Between here there are 20 over 20 years, and this is 1990, this is 60, so there is 30 years, and sadly we don't see the whole picture here because human age limits our data, but we can probably say that it's something like this. Then there is this gap, home buying years, and we're talking not today, we have to shift the graph 20 years or so because the home buying years are at 20, not when you're born. You don't take loan if you're born, you take loan when you're buying your first home. Also probably 70 years ago people took their first home loan earlier than today. So what can we conclude from this? That the stock market correlates with demographics pretty well, and that has been the point of my recent videos, that if you're looking at the big picture, you have to know how so to say money in the system works. Yeah, we're not backed by gold anymore, so it's technically not money, it's fiat currency, but people still call it money, so that's that. I think I'm not going to go deeper in this video. I'm sticking with demographics. So let me know what you think. Do you find this interesting, educational? You can do this with any country. You can take any currency. if you have demographics for that, then you have the data. Of course, political forces and such play a big role as well. But other than that, it is pretty straightforward, and we can see that demographics actually plays a very big role, and it's more important than the news or the mainstream actually tells you. They tell you that the last decade is because of asset price bubble collapse, but that is not the reason. That is the consequences, and asset prices collapse due to the shift in demographics. And of course it doesn't have to be like that, but it's in our current system, and that's what we have to operate with. So thank you for watching, and see you in the next video. Goodbye.